Look at this.
Gold prices have experienced one of their steepest quarterly declines in more than a decade.
Oh my God.
However, beneath
Isn't
the
it
selling
great?
pressure,
Chris!
institutional
I know, it's my
demand
dream.
remains surprisingly resilient, suggesting
I
that
have
the long-term
goosebumps
story for gold
everywhere.
may be far from over.
Look at this.
Stock analysis.
Rising U.S.
Two
Treasury
main methods
yields,
stand
a
out.
stronger
Fundamental
U.S.
and
dollar,
technical
and
analysis.
expectations that the Federal
Fundamental
Reserve will
analysis
keep
dives
interest
deep
rates
into a
higher for
company's
longer have
financial
triggered
health.
heavy
Think
selling
revenue,
across the precious
earnings,
metals
and management
market.
quality.
These
It's all
factors
about
pushed gold
understanding
to
the
its
business
worst
behind
quarterly
the stock.
performance in 13
On the flip
years.
side, when it comes to
Markets increasingly believe the Federal Reserve will maintain restrictive monetary policy for longer as inflation risks persist. Higher interest rates increase the attractiveness of bonds and the U.S. dollar, making non-yielding assets like gold less appealing. Despite the price decline, central banks, particularly in Asia, continue adding gold to their reserves. Their long-term buying strategy reflects ongoing efforts to diversify away from the U.S. dollar and strengthen reserve stability. Analysts note that physical gold demand from long-term investors has remained stable even as speculative money exits the market. This steady accumulation could help establish a stronger support zone if market volatility continues. Although short-term risks remain elevated, many analysts believe the next direction for gold will depend on inflation, Federal Reserve policy, and continued central bank purchases. If these supportive factors remain intact, today's weakness could eventually be remembered as a long-term accumulation phase rather than the start of a lasting bear market.